Hello, this is Pat Walker at Mission Winners making a how-to video. There's a ton of different how-to types of books out there. How to lose weight, how to gain weight, how to make muscles, how to run faster, how to concentrate better, how to make money in the stock market. There's a book, good book by Bill O'Neill. Yeah, great book. How to not get your butt kicked in a major stock market decline. How about that? How to do that? We're going to talk about that. I just want to go through this very, very slowly for you. Years ago, I taught on the university level, and I'll share this with you. These were advanced level classes, and I wasn't a jerk, but one of my finals was 24 pages typed. Very thorough. Strategic planning classes, statistics. So we're going to go through. I'm going to give you, hopefully, $1 million education, a way to make money, but also a way to save money and a way to save your you-know-what. So we're looking right here at two charts side by side. We're going to do this for an educational experience. This will help you. I promise. This will help you. A lot of people look at charts always after the fact. You know what's better? Look at charts before things happen. Study them and learn from them, and you will be better prepared the next time. It's very, very important. So we're looking at the spiders. The date right here, 2/20. And over on this chart is Apple. Daily charts, 2/20. Same apples to apples. That's a bad pun. I'm sorry, I didn't think of that until I said it. But it's not too bad, is it? So here we go. Same axis. We're looking right here. Same time frames. We're looking here at spiders. Notice this bar. This is what you're looking at on February 20th. It runs up here. It's above the moving averages. It runs up and it closes up on the day. See that? It closes up on the day. There's the open and there's the close. On lower volume. On that day, Apple actually gaps down and closes down on the day on a pickup in volume. But do we panic? No. This is above the rising 8-day. This is above the rising 20-day. You just watch it. This did fall, though, on a pickup in volume. You can see that volume's heavier than it was for several weeks. Is that a reason to sell everything? No, folks, don't do that. And again, I stress, the reason we're doing this is show you how to save your butt, okay? How to manage your account. This whole time, by the way, no 5-minute charts. Please, you get a tremendous amount of information from daily, weekly, maybe hourly, maybe 30-minute. Just, you're looking at big picture. Big money is made in big picture. So advance this one day. And again, note, this fell on a pickup in volume. Advance it one day. And it falls below the 8-day on a pickup in volume. Look at that volume. Advance this one day. Look at this. Apple loses the 20-day on a pickup in volume. But note this on the spiders. Volume fell on a pickup in volume. Now, I need to share something with you. I've been doing this since 1985, 86. Don't get wrapped up in the Dow. It's only 30 stocks. You want a more relevant measurement of the market? Use the S&P 500 and the NASDAQ 100. Much better. And don't look just at price, look at volume. Look at it in relation to moving averages. Okay? Falls on a pickup in volume and loses the 8-day. Loses the 20-day on a pickup in volume. Advance it. This is a warning sign. Is this a panic to say sell everything? Good Lord, no. But when you put it in the context with what all these stocks were doing on this day, you'll see what I mean. Remember that date, 2/21. I'm writing it down. 2/21, February 21st. Advance it a day. Folks, that ain't mom and dad selling. That's serious. Look at where it opened. Look at where it closed. Closed near the lows on heavy volume. Here's what Apple did that day. It gaps down and closes above where it opened, but this is a bad bar. And it lost the 50-day also. The green line, by the way, is the 50-day simple moving average. This blue line is the 21-day exponential, and this yellow is the 8-period exponential moving average. 8-period exponential, 21 exponential, 50 simple. Big warning sign there. and you saw it in the chart. Advance it one day. Oh man, that's going to leave a mark. Look at down on heavy volume. Down, not as much, but on heavy volume still. Selling. Advance it. Down again. Advance it. Oh, an inside bar showing some strength. Showing some strength. But look at this. It's below the 50-day, and the 50-day's fallen. Advance this a day, and this a day. Look at that. Gaps down, closes down on heavier volume. Closes down on a big pickup in volume. What's the moral to the story? It's very important. If you have rules and tactics to get in, you should have rules and tactics to get out, to manage your funds. Nobody's going to manage your funds better than you do. This is what we teach. How to, people say, how to make money in the market, how to also save yourself from pain, how to manage it properly, both going in and going out. Everybody talks about getting in. You got to sit there and talk about getting out also. No day trading, managing it properly. And the markets will tell you what to do. I love this quote. I had this quote taped to my monitor for over 2 decades. I'll believe in what I see and not in what I believe. Oh, it's got to come back. Why? Because you think so? No. Watch price, watch volume, watch them relative to important moving averages. This is ugly. Big decline. Advance it a day, and it puts in this drop and reversal bar. This did too. Apple did. This is a horrific decline. Horrific. Okay? Now, I want to key on these days here. 2/21 and 2/24. Remember those 2 dates. And here's what I'm going to do for you. I'm going to slide this back to these 2 dates. 2/21, 2/24. 2/21 and 2/24. We already saw what this did on 2/21 and 2/24. Let's look at other big stocks. Amazon. Watch this. $221. 221. Excuse me. 220. Get this right. 221. 221. This had already gapped down below the 20-day on a pickup in volume. Advance this one day. Boom. Advance this one day. Now look at that. Down. Get the right day. Gaps down. Look at that. Lost the 20-day. There's 221. Here's 224. 221, 224. All right? Remember those 2 dates as I said before. What's the whole point of this exercise? Monitor the markets and monitor the price action of the big max list stocks. 221, 224. BABA. Look at this. 221 right there. It's already below the 50-day, okay, on 221, even though the spiders weren't. And it's lagging, and it's still lagging. But right there, those 2 dates. Continue onward. 221, losing the 50-day. 224. These 2 days right here coincide with these 2 days on the spiders. Facebook, 221, losing the 50-day. 224, falls below the 50-day. And you get this. Take a look at this, folks. This would hurt. From 215 all the way down to 140? That hurts. That messes with you both financially and psychologically. 2 very important pieces of capital in the market. Your money and what's going on between your ears. Protect them both. I can't stress that enough. Advance it. Goldman Sachs, it was down below on the 20th, the day before, and just dropping. There's nothing here. Continue onward. Google, 224. Look at this. 221. Here's 224. There's 224. Gaps down below the 50-day and falls. Falls, I don't know, almost 400 points. In fact, it did fall 400 points. 400 frickin' points. That's going to leave a mark. Netflix. Loose. 221, 220, 221. But was it stronger than the market was? Yes. But do you see these tail bars? There's another valuable lesson. Look at the open on this bar. The open's right there to the left. You see it? And then it runs all the way up and it closes near the lows on a pickup and volume. Folks, that price bar is telling you, combined with volume, they're not buying, they're selling. Mark those, make marks of those bars. Take note. NVIDIA, 220, 221, drops. You missed this. If you followed your rules with what the market's doing and you followed your stock with price and volume, you avoid some major pain. Square, 221, 220, up 221. And then you get this. And again, folks, I'm going to advance this. All this hurts. Tesla, 219, 220, 221. Oh, it's still strong. Let's stay with it. And then you get this. Well, it's okay. The stock was really strong before then. I don't know, 900 down to 350, 360. 900 down to 400. How about that? 900 to 400. Oh, sure, it's okay. How does that feel? Twitter, down. Visa, 220, 221, and then you get this. Pretty dramatic drop. And MasterCard, similar situation. So this to me is very, very important. It's the idea of how to get in, how to manage it properly. I'm going to show this again. And we're going to take a bigger picture on this now. Here's the spiders. 220, 221, and I'll slide it over so you can really see it as it's happening. 220, down on a pickup in volume. Again, 224, 21, down on a heavy volume. And you get this. And that ain't mom and dad selling. That's serious. Don't argue with this. Lose this phrase, oh, it has to come back. Why? Because you own it? No. One of these huge declines can really hurt you psychologically. I have a degree in psychology too, and studied stress in some of these advanced classes. Very on a higher level, stress to the point of suicide with people. And the idea of controlling stress. Now, how can you control stress? It's very simple. You address the environment that you're in and you manage accordingly. Simple rules. Buy rules. Everybody talks about the buy. A lot of people really don't focus on the sell. How are you going to get out to manage it? By so doing, again, it protects your financial capital and it protects your emotional capital. I can't stress. I've got a recommendation for you, all right? Market Wizards by Jack Schwager. The last chapter is an interview with Dr. Van Tharp, and he coaches and trains professional investors and traders how to be better. What's going on in your head? The biggest part of this game is not, this is my own thought, the biggest part of this game is not what's before your eyes, it's what's between your ears, your thought processes. Now you can say, boy, this is advanced. No, it's really not. Just looking at price and volume objectively. Don't impose your will on it, and you'll do better. And by the way, you're talking with a guy who was there for the crash of '87. I remember it. It was quite an event, to say the least. But we had rules. I'll believe in what I see, right? And not what I think. And folks, we were watching it, and I'm thankful for this, and I give credit to Dr. Martin Zweig. I will tell you that right up front. Our managed accounts were out a couple of weeks before the crash. Just watching price and volume action back then was giving us clues similar to this, that things aren't working. Now, when you see this, do you know what the future is? No, and if you say you do, you're lying. You're not truthful with yourself. Just have rules. Have rules to avoid this kind of stuff. I mean, this will mess you up. So how to do something, how to make grass grow, how to make money, how to manage money, how to control risk, how to limit losses, how to watch the markets. How about that? How to watch the markets with an open mind and act accordingly. And it's right there, folks. How to. A lot of people didn't do this, follow this, and they got hurt bad. We just glided out. And stayed out and missed the decline. By the way, do not think I'm bragging. Do not think I'm thumping my chest that I'm so good. Oh no, it's not a case of that. It's just through years of really hard study. You know why I'm so serious about this? I'll tell you why. I was the sole supporter for 6 people. Myself, my wife, and 4 kids. I had to make money. But I also had to manage risk and make sure I never got stuck in one of these. Anyway, I wanted to share that with you. I wanted to help. That's my goal, is to help. It's what we do at Mission Winners. How to get in, how to ride trends, and how to get out. And I will tell you something. All 3 of those are crucial. And the reason why is just a couple of trends can make you some very good money. And yes, we owned this and rode it all the way up. Why? Because it was riding a trend. If you look very closely, you will not see one bar on this entire trend that this stock closed below the 8-period exponential moving average. Not one. Guaranteed. And we just manage it day to day to day. This whole move, did we ever look at, shorter time frame charts? No, why? Don't need to. Ride trends. Know when to get in, know when to ride trends, know when to get out. Anyway, I wanted to share that with you. How to manage risk, how to ride trends, how to stay out. You combine those factors together, that knowledge base together, and you'll be light years ahead of others. Anyway, I thank you very much, and I hope this helps you. That's my goal.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.